global markets went for a second consecutive week on the upward side. This was primarily fueled by the good data points that has arrived in the US markets. The jobless claims have fallen again, as well as the nearest GDP data projection is revised upwards to about 2.1%. While all the markets went upwards, because the Shanghai Composite Index had gone to the negative side, primarily on account of Donald Trump signing the Democratic and Human Rights Act of 2019 for Hong Kong. So that's been a negative for the Chinese market. Overall, US Nikkei, FTSE and S&P 500 have been moving upwards. The DAX and CAC have also moved upwards. However, they've not moved as much. They've been less than 1% on the upside. The Indian markets also followed the global suit, and it has been bullish over the last entire week. There has been concerns with regards to the India GDP data, and that's been sending some amount of concerns among the market participants. However, the finance minister is talking about fresh measures to be taken up for the realty sector and looking at means to boost the GDP outcome. So that's been taken positively by the markets. Overall, in the last week, the market had moved about 12,000 odd levels, but couldn't sustain and had retracted back. However, subsequently in the last week, it has gone positively over the 12,000 odd mark, has stayed above, and it is closed and it's consolidated at about 12,151 odd levels. In terms of the indices that did well in the market was PSU Banks, which was up by about 5.9%, and metals, which was up by about 7.6%, while the indices that didn't do well was metals, which was down by about 3%, and IT, which is down by about 1.1%. Overall, what we expect in the coming week in terms of the market is a positive sentiment. The Q2 earnings data has been positive, though the revenues have been flattish, but there has been a re-rating in terms of the valuation, and that's creating the upside of the market. So we have a positive bias towards the market in the coming week. In terms of our stock recommendation for this week, we have HSIL. We have a target price of about 58.8, which is a 25% upside from here on, and a stop loss at about 40.9 odd levels. In terms of their results, the Q2 results, their operating margins have doubled. It has got to about 15.7%, so a good operational efficiency in the business. The revenues did take an impact. This is primarily on account of segregation of the businesses. So they have created two wholly owned subsidiaries, one focusing on the retail and the consumer segment, and the other on building products and marketing segments. So that's essentially what has impacted. In terms of the lineage, this has been one of the early players in the space, started in 1960, so it has a long pedigree and a good management team. So that gathers well. The promoters have a reasonable amount of ownership, close to about 50%. So overall, the quality of the holding is appropriate. Their packaging business is turned profitable, so that business is doing well, which was a concern in the past. Overall, they have a diverse product portfolio catering to the home solution segment, in various categories, and they have been doing well in all of these products. The distribution arm has about 8,500 odd touch points, and most of their products are sold through these touch points. So they have a very strong distribution segment, which would ensure the demand is met, especially the replacement demand, which has been increasing over the past 1 year. In terms of valuation, they are trading at about 3.6 times TTM, which is fairly reasonable. It's one of the very few stocks where you could find the valuation at below 5 P levels, and that raises a compelling indication for buying into the stock. So that's our recommendation. Thank you.